Despite the holiday dedicated to Labor Day, our team has prepared for you a review of the major currency pairs and the US dollar. Today, the main focus of market participants is shifted to the United States. Firstly, crucial data on the labor market and business activity in manufacturing have been released today. Secondly, the Fed Reserve will announce its decision on the funds rate. As expected by most analysts, the policy decision itself is just a duplication of the 6 previous meetings. Still, the outcome of the Fed's meeting may raise a wave of volatility in the markets because Jerome Powell's press conference will certainly contain some signals regarding the future agenda for interest rates. For example, the Federal Reserve Chairman may take into account the ADP employment report published today. The data is calculated automatically and they quite often do not correlate in any way with the official non-farm payrolls. Nevertheless, automatic data processing ADP recorded 192,000 new jobs in a private business in April. The forecast suggested only 175,000. Despite the stronger than expected employment, the US dollar index is trading today on the defensive. The greenback's price in relation to 6 main analogs is sticking to the upper border of the monthly range above 106 points. This is understandable. At present, there are few market participants willing to take risks. Therefore, the US dollar index remains within the range of 106.20 to 106.50. Today, Wall Street also cannot boast of much optimism. The S&P 500 index is unable to recover after yesterday's disappointment, so it's a consolidation today within a narrow corridor of 5,024 to 5,033 points. The main catalyst of its fall, as well as the previous growth, were stocks of companies related to artificial intelligence. And this time, it's the manufacturer of AI chips, Supermicro computer, whose quarterly revenue did not live up to expectations. The data on newly opened vacancies in the United States also did not come up to expectations. The number fell to 8,488,000, and this data is only for March. But given the decrease by 352,000, it makes sense to draw an analogy with the possibly lower non-farm payrolls which are published on a Friday. Besides, an indicator of business activity in the US manufacturing sector was also released today. The ISM PMI also fell short of the forecast for 50 points and slipped to 49.2, so the April reports indicate a contraction in the US manufacturing sector, which could not maintain momentum. After all, the PMI grew to 50.3 months ago. Markets in Europe are largely closed today as many countries celebrate May Day. Therefore, the euro-dollar pair depends on American traders and is growing amid the greenback's temporary weakness. The euro-dollar pair is trading lower within the intraday corridor between 1.0653 and 1.0687. The single currency found temporary support at 1.0650, although uncertainty over the future policy of the US Central Bank subdued the luster of risk-sensitive assets. Therefore, the short-term outlook for the euro-dollar pair remains bearish. Besides, the euro's position looks vulnerable in the long term too. After all, the ECB intends to cut interest rates after its June meeting. ECB policymakers have repeatedly emphasized that there will be no specific trajectory of interest rates. So, each time they will make a policy move depending on economic data. Meanwhile, gold prefers not to wait for any economic reports, and today the precious metal is trading in the intraday corridor between $2,291 and $2,320 per 3 ounce, because it's in demand amid risk aversion among investors. At the same time, crude oil is unable to determine its direction, whether to rise due to a weak US dollar or retreat amid rising hopes for a ceasefire agreement in the Middle East. As you can see, Brent prices are very volatile today, but overall they have been declining for the third day. As a result, Brent crude fell below $85 per barrel, and the benchmark rate is trading today lower within the intraday corridor between $87.4 and $88.7 a barrel. The possibility of a ceasefire between Israel and Hamas has calmed down fears of supply disruptions, and the level of oil inventories and output in the United States again considerably missed the forecast. Instead of decreasing by 1.1 million barrels, production on the contrary went up and logged the largest monthly increase in about 3.5 years. You have watched the market review by InstaForex analysts for Wednesday, May 1. Subscribe to InstaForex TV channel and we keep you updated on all market developments. Feel free to ask any questions and leave your comments. See you online tomorrow.